Hello and welcome to the channel. My name is Jonathan and I look at tech companies for investors. And today I'm going to be having a look at Datadog. Now, Datadog is quite an interesting company and I actually quite like the look of Datadog. And firstly, I'm going to kind of explain in a non-technical way what Datadog offers as a service. Then I'm going to have a quick look at their stock price. And then I'm going to have a look at their kind of most up-to-date and recent financial documents so that you actually have an idea or an understanding on whether it's a good company to be invested in. Now, please bear in mind that this is not investing advice. Do not base any buying or selling decisions on the content of this video. Please do extensive research before you buy any company. Now, saying that, please, if you do enjoy the video, I would really appreciate if you hit that like button. And if you do like the content of this channel, I would also appreciate if you consider subscribing. Now that I've gotten the plug out of the way, let's actually first look at what service Datadog offers. Now, Datadog is, well, it allows companies to get information from their cloud services. Now, I've done a video on cloud services before, which I will link somewhere up above. That if you want to have a quick look at and you're a bit unsure about cloud services, then you can have a look at that and you can come back to this video. Now, cloud services are quite complicated and they can get very complicated very fast. And if you don't know what you're doing, it can be very hard to get the information out of a cloud service that you would want. So if you're not a network engineer, getting the information and the data out that you actually need to do your job is quite tricky. And I'm going to explain a kind of scenario that you would actually want to get data from a cloud service provider and how you can utilize that data. And then I'm going to explain why Datadog offers a way for you to see that in an understandable way. So let's say that I have a brand new website and I'm going to deploy this website all over the world using a cloud service provider. Now, for me to get to the most amount of people, it helps for me to run this website in multiple servers across the world. That means that whenever someone tries to access my website, let's say they try and access it from China and my servers in America, there is a lot less time for that information and the website to go from America to China, if that makes sense. So I have this brand new website and I'm going to set up 3 servers. I'm going to have one in the United States, I'm going to have one in the UK, and then I'm also going to have one in China. Now, I'm just starting out. I don't know where my main customers are going to be, so all of these servers are the exact same size. They have the exact same spec. They don't have anything special about them. They are almost identical. The only main difference is the fact that they are in different locations across the globe to serve different people all over the world. Now, if you do have any technical experience, please ignore the fact that you can do load balancing and you can also automatically scale horizontally and vertically with cloud services, but that is too technical. So for the kind of simplistic approach, let's just say that these servers are the same size and they are fixed the same size. Now, it's been 1 month since I set up these servers and I can go into my cloud service provider dashboard and I can see exactly how busy these servers have been. Now, I can see that the United States one has had pretty much 70% of all the people going to my website have visited from the United States, 29% have visited from the UK, and 1% has visited from China. So I have 3 servers, one that's working at pretty much max capacity, one that's probably working at almost 50% capacity, and I have one that's barely working at all. Now, as a network engineer and a cloud service engineer, this information is really important because then I can actually allocate and change how I distribute the resources. I know that the Chinese version or the Chinese website or the Chinese server doesn't actually need that much resources. I know the UK one is probably sitting quite well, but I could reduce the size of that server if I need to. And I need to allocate more resources to the United States server. So for a network engineer, this is really important. But let's say that I didn't actually have access to the cloud dashboard, or I didn't actually know how to interpret this data, because this data can be quite hard to find if you don't know what you're looking for. Companies don't really often like having a lot of people accessing all the servers in their entire network, because if that person doesn't know what they are doing, then something could go wrong. Now, let's say that my organization has multiple teams. You've got the network engineers and the software developers, but you also have sales and marketing staff. The fact that 70% of the people who visit your website are visiting from the United States, where you only have 30% visiting from the rest of the globe, essentially, shows you that you either need to increase your sales and marketing expense in those other places, or you can focus your sales and marketing in the United States. So this data and this information is important, but it is important that the person who is looking at this information understands what they're looking at. That is where Datadog comes in. It allows organizations a way to, without giving direct access to the cloud service dashboard, a way to get the data to different parts of their organization, separate the data into what is important for each part of the organization to be more efficient, and also display it in a way in which they understand. So the example I gave was the network engineers and the sales staff, but you could also use things like the software developers knowing where they have inefficiencies in their code. They can also have the network engineers looking at where they should distribute resources, and the sales and marketing staff can know who's visiting the site and where from. These are just a few examples, but what information you take and how they interpret that information is almost limitless. I do hope that explanation helps. Just know that Datadog offers ways for companies to take out what they need from their cloud services to be more efficient and save money and potentially make more money. But enough about that, let's actually go and have a look at how the company's performing itself. Firstly, we're going to start with its stock price. First, actually having a look at their stock price, they're sitting around $88 per share. Their 52-week range has been around $29 to about $119.43 if you want to be specific. Their market cap sitting at about it's almost 27 billion. They've shown some steady increases since they IPO'd in September 2019 to now. Their earnings per share aren't very good. They're at negative $0.12 per share. And yeah, that's kind of the most important information that I can take from this at the moment. It looks like they've actually had quite a hard day, dropping down from about $93.50 to $88. But I don't particularly like to look at the kind of day value. I like to look at it over the long term. So the most important thing when it comes to long term is whether the revenue is good. Here we have Datadog's kind of announcements of their fourth and final quarter for 2020 and their outlook for 2021. So I quickly want to actually have a look at this and go over the main points. Fourth quarter revenue grew 56% year over year to 178 million. Strong growth of large customers with 97 1 million plus annual recurring rate. So that's kind of like subscription based revenue, which is quite nice because it's revenue that they don't really have to work for, is up from 50 a year ago, which means that they almost doubled the amount of customers they have spending $1 million a year with them. That is actually quite good. Okay, so revenue was 603.5 million, increased from 66% year over year. So that's pretty impressive. You have a GAAP operating loss was 13.8%, and GAAP stands for Generally Accepted Accounting Principles, I believe. I just said about their annual recurring rate of customers over 1 million was 97, but as of December 31st, 2020, they had 1,253 customers with an annual recurring rate of 100,000 or more, an increase of 46% from 858 as of December 31st the year previous, so 2019. They also announced an agreement to acquire Screen, a software as a service based security platform that enables enterprises to detect, block, and respond to application level attacks. Announced the acquisition of Timber Technologies. Sounds interesting. The developer of Vector, a vendor agnostic and high performance observability data pipeline. I don't actually know what that means. With Vector, customers can collect, enrich, and transform logs and other signals across multiple tools and data sources in both on-premise and cloud environments. So data logs are quite important. Now I get the Timber Technologies. Launched the general availability of incident management, which allows users to declare incidents, investigate root causes and dependencies, collaborate around a shared view of the incident. That sounds boring. Delivered audit, they delivered stuff. Okay, first quarter and full year outlook for 2021. So for the first quarter of 2021, which I believe we're in already, the revenue between 185 and 187 million. Their full year outlook of 2021 is revenue between 825 million and 835 million, which is quite conservative considering they had a almost 50% increase the year previous. But yeah, I think kind of being conservative, especially with how things are working nowadays, is a good approach. Okay, time for everyone's favorite bit, mine included, is the revenue. So you can see the year ended December 31st, 2020 and 2019. So the revenue went from 362.78 million to 603.466 million. They invested quite heavily in research and development and sales and marketing, which is, well, important. But the kind of non-flexible day-to-day costs, which are general and administration, they have quite promising general and administrative. The reason I like to look at general and administrative is because it's day-to-day things. And in the event of like a catastrophe that hasn't really happened yet, then research and development and sales and marketing they can cut back on, but general and administrative is something that if they are going to survive, they need. So their operating loss, when you compare 2019 to 2020, they managed to increase their revenue quite significantly, but they also invested a lot more in research and development and sales and marketing. And their net loss from 2019 to 2020 did increase, but the revenue is still quite promising, I would say. And it's not really a bad company, and it has quite a good idea behind it. Just to throw a little bit of maths in there, if you take their revenue of 603.466 million and you subtract the non-flexible costs of cost of revenue and general and administrative, so 603.466 million, subtract 130.197 million, then subtracting their general and administrative costs, leaving research and development and sales and marketing. I know they will never stop investing in research and development and sales and marketing, but if it really came down to it, so you subtract the general and administrative costs of 62.756 million, you end up with 410.513 million, which you could kind of count as their true profit margin. Now that means that almost 66% of their revenue could be profit if they really wanted it. Now, I'm not saying this is actually going to happen, but the reason I like to look at this is because with tech companies nowadays, it's very hard, well, for tech companies like this, they don't always turn a profit. So you have to kind of read between the lines, and revenue and the kind of cost of revenue and how they can keep their costs low is quite important. So read between the lines and look for the companies that kind of have the potential. If it really came down to it and they really had to cut back, they could survive. So yes, my kind of final thoughts on Datadog. As a company and as the service it offers, it's quite good. And over the past year, they have been on a bit of a spending spree, but that's probably more to do with the fact that they did go public near the end of 2019, and 2020 was their year to really push in terms of like growth. And they have done that, and they have grown quite large. They increased their revenue almost 50%, and they also increased their annual recurring rate, well, which is kind of what they offer. They offer a subscription service by quite a lot too. So as a company, it does have quite a lot of growth potential, and it offers a really interesting service, especially as cloud services become more popular. And cloud services as an industry is growing, and understanding and interpreting the data from cloud services is going to become even more essential. Not just for network engineers, not just for software developers, but also for pretty much every industry or every unit in part of an organization. So I do hope you have enjoyed this video. If you do like Datadog as a company, then let me know by liking this video. And if you did enjoy the video and you would like me to do this about another company or another company you are interested in buying, then please comment that company down below and I will have a look into it. Thank you very much for watching. Do not forget to subscribe to the channel if you do like the content, and I will see you next time.